seagulls just going. I mean, actually, they probably are the seagulls, but we got some. It's been young seagull season, so the all the babies are here. So you can actually hear probably all that screeching, and probably just the young ones. Actually,
And
that's an old one.
where are you right now? I mean, because there were a lot of seagulls screaming at you.
Yeah, well, I'm just in my office at the top of my house.
Yeah, but I mean,
Um,
where are you located? I don't remember. I think
oh,
you told
Brighton.
me Brighton. Ah, I
Yes,
remember now. Brighton Beach, Big Beach Boutique, and etc.
you got it. Yeah, you got it. So we are live on YouTube. I presume we are also live on Facebook as well, even though YouTube does not seem. Hold on one second. I'm going to make sure that. Good morning, everyone. Just if we are live on YouTube, I'm just double checking that we are.
I am checking that right now on
Yeah,
my
we are.
end.
I think we are. Yeah, sweet. How you doing, buddy? All right, let's share some screen just so we can make sure we are all on. And I'm going to presume we're live on Facebook. I will go onto Facebook as well.
Yes, we are live on YouTube, and I'll log into Facebook just to get the chat on also.
Fantastic, mate. Fantastic. Yeah, log in there. I'm just doing the same thing. All right.
Hold on, let me see this.
Yeah, we're all right. We're all right.
All right, how is
So
everybody doing?
I'm hoping everybody's all good, mate. We got interesting, like fascinating price action going on. You know, we talked about the DAX not too long
Yeah.
ago, actually maybe even last week, and I
Every
was
time
saying that
we
I would
every
use.
time we've been together, we have been talking about the DAX.
Yeah, well, I think the DAX an interesting one. I don't think it's the most interesting right now. I think the Nasdaq is the story really in town. Even though I think global equities generally are quite fascinating, the
Yep.
rally that we've seen seems more based on hot air than ever before. I mean, it's the rally that we've seen really in the S&P and the Dow. I think the Dow is just
Yeah.
on a crazy tear to the upside. You know, more so than anything else. I know it's got a little bit of a weakness in the bar there, but we look at this on a daily chart. And it looks like it's well and truly on its way back to the upside. I think there might
Yeah.
be just a bit of slowing down coming in. I've got this this level just going along there, which we're right up against now. So, you know, it would be sensible to assume that this is going to bash its head here and just retrace a little bit, maybe not too far. There's another area of support right here. But it would be sensible to assume that that's going to happen. I think the surprising thing to me was Friday and Monday's price action, because Friday was this bar here, which was down
Mm-hmm.
for a lot of the day, and then it shot up towards the end. And this is obviously Monday's bar, so the rally continued. And really, you know, from what I gathered, some of the price action that was going on, some of the weakness in the market was because of the lack of a deal on Capitol Hill, and
Mm-hmm.
that didn't seem to change. I was surprised that that there was any buying at all after we didn't really have an announcement from the lawmakers. We just had an announcement from Trump just saying, you know, I'm signing this order. So we're all good. I mean, maybe it's because the expectation is that after he signed that, there would be further stimulus or further talks that would have to come into play. But you know, look at the FTSE again this morning. Already, we kind of we wake up and we are off and running. You know, we're sort of
Yeah,
like
running
there's an
hard.
attempt, another attempt to get us back to these highs, and potentially beyond. The FTSE is also on a level of resistance as well. It's not so clear on.
And that 6100 level on the FTSE is a super strong level of resistance at the moment.
Yes, yeah. So we're about there. That looks to be. In fact, the neckline on this one is a lot clearer. We do have an inverted head and shoulders now. Head and shoulders patterns, inverted head and shoulders patterns. So they don't tend to work out, but
I
there's
agree
a
with you totally on Head and Shoulders. I mean, I do trade pattern breakouts, and the only one that I do not trade is the Head and Shoulders because you know, the probability of success of Head and Shoulders is just too low.
Yeah. Yeah, I agree, mate. You know, the way that Head and Shoulders is my favorite pattern.
Really?
And yeah, it is. And the way I like to trade it is to try and pick it up somewhere around on the neckline, on the shoulder. So then when you get to the neckline, you can take profit here. And then if it goes through, you know, you're freewheeling at that particular
Exactly.
point.
A little more speculative in the sense that the shoulder has not been created yet, but I do get you. I do
Yeah,
get you.
so what I always look for is the turn, you know, so I wouldn't want to try and pick where the shoulder is, but when it starts to turn, this would have been a really good area here, a really good example of a turn on turn on a right shoulder.
Yeah.
You know, there's a trend line break as well along here. So when it starts to kind of show me that there's a turning point on the shoulder, then I like to try and trade it. And I didn't take this one because I have just got.
As I remember, you were short the FTSE, but that wasn't yeah, last Monday I think we took a short on the FTSE, right?
Yep, and I tried to take a short yesterday as well, but that also hasn't worked out. I'm still keen on the short, but now I'm going to need to see what it is that's going to allow this market to come down, because there just does not seem to be any negativity that is filtering through. You know, it amazes me really that that we've got the rally going on that we've got. I don't think the stimulus has been announced, and
nope.
You know, that there's certainly enough confidence to kind of keep us so far to this point. And the S&P is the same. You know, it's getting very, very close to its all-time record highs again. Look at this on a weekly chart. Very, very close to the record highs.
That is amazing to me, you know, mate. And yesterday I was on the show. I was listening to your show with Jeff, and I really enjoyed the conversation that you two had about how global equities do not represent the actual economic reality, right?
Yeah.
And you know, that's something that really interests me, in the sense that when you're trading, mate, you have to trade what you see, not what you think, right?
Yes. Yeah, absolutely, and it's interesting, I think, because you know, there's lots of different kind of approaches to trading, obviously, and one of the main things is that people say about random walk, which is effectively that technical analysis is completely random, and you can't use technical analysis to trade. You need fundamentals. Well, I think you could flip that on its head in this particular period, because the fundamentals do not match the price action. I mean, there's no way that that companies can have the same value. You know, we've got companies cutting dividends over here. So
yes,
companies haven't got the same values as they had before the pandemic arose, and yet we are back pretty much to the same levels.
Exactly.
So the fundamentals, again, you know, as well, just aren't matching out. So everything really, when it comes down to it, is a random outcome, whichever way you decide to kind of trade. We're trying to increase our probability, and whether you do that with technical analysis or fundamental analysis, I don't think it really matters, as long as you take yourself over a long period of time.
Exactly. That's what matters, you know, the sample size of your setups. But the thing is that, talking about global equities, you know, what amazes me is that I don't understand how, let's call it the market, you know, let's call it the market participants, do not get that liquidity does not equal profitability, you know. I'm going to be completely honest with you. When back in at the end of April in the S&P 500, I mean, I did my research, and everything that came out of my research and my technical analysis too. So I'm talking about technical analysis and fundamentals, pointed to the downside of U.S. equities, and I was looking to short the S&P 500, you know, and it was really hard to short the S&P 500. So at the end, what I decided to do is just, you know, I cannot fight central banks, and even though it doesn't make sense to me, I am going to try to buy the dip You know,
Yeah.
the markets can remain irrational longer than we can remain liquid. So thank you, Livermore.
Yeah. Yeah. Well, that's the thing. I mean, so we've got some things in the chat box. Euro yen long daily setup long. We'll have a look at that in a moment. FTSE dropping. Ashley still in your FTSE's trade? No, Sanjay, I got out pretty quickly. To be honest, I did get out for some profit because and it was marginal. I think I made about $5. Because
Practically break
you know,
even, but you didn't lose money. That's the important
no,
thing.
no, I didn't lose money because I don't like markets coming back at me. If I've seen a setup and the market's gone in my favor, I do not want to see the market then come all the way back. And I'll show you what I was looking at yesterday to promote that. So I think we got in at I think we got in at 67s or something
Look
like that.
at
Yeah, it was
that
here.
bear trap on the FTSE.
Yeah, I mean it's looked dangerous for a while, and this is why I can't go long. The short has just confounded me, and you know, I haven't been run over because this was the area I traded yesterday. So the market did come down, but as soon as it was coming back at me, then tried to get down but came back again. I was closing the trade off there. You know, I was just like, this isn't going down. You know, there is no price action which is suggesting that this is going lower. And if it does go lower, then I'll get in. You know, we're high enough in the picture up here, particularly on the weekly chart, actually, to show us that that there is potentially this kind of return to this breakout point to get in anywhere. You know, we don't have to worry about the intraday charts so much when we're looking really on these weekly timeframes, and that's what we're looking at on the FTSE 100. We're looking at potentially weekly areas of resistance. Now that's the next one, you know, and when I look at this, so I've been looking because they're all going up in tandem, really.
Yeah.
And if we look at this now, the FTSE's here at 6,100, as you said. It goes up another, it goes to 62.20. So that's around about, it's just shy of 2%.
Yeah.
Now we go to the S&P. S&P on the monthly, the highs are up here. Just there. So that to go to its high is around about, well, it's just over 30 pips. So it's just over 1%. So we're between the 1%, 2% range for that one to get to serious resistance. Same with the FTSE 100. Now we go down to the Dow Jones Industrials. For this one to get back up to this point, which I think could be interesting, just over 1%, to get back to its all-time highs. It's more like looks like maybe a 5% move, but this point here is always a really interesting area for me. And when I'm trading intraday, one of my favorite trades is to see price come and retest the bar that would be the trigger bar for most other traders. So
so you don't take the trigger bar?
I don't like to. I much prefer limit orders than stop orders.
Really?
Yeah.
Can you expand on that?
Yeah. Now the reason that I prefer to take a limit order than a stop order is because and it is the buy the dip mentality, if you like. You know, is what you did with the S&P. But the reason I prefer to do it is that our job, if we had a job description, the job description would be, the first line would be deal at the best possible price. Get me a deal. If we were a boss and we were sort of like saying, you know, what have we got to do? The boss would say, get me the best possible price. Now, if I believe the market is coming down, and this is the area that it came out from, and I could use this, you know, against with anything. Let's say it's here. Let's say that's our breakout point.
Yep.
Now, some people would trade above that bar because it would suggest that, you know, with I know Jeff would take it, but his strategy is different. But he'd be looking at maybe to enter above that bar. But what I prefer to do is trade this particular price, because if that's the short, and we know that if the market all of a sudden flips, then that will probably become the long. Then that surely would be the best possible price on retracement. Now, at that point, all I've got to decipher is, are we continuing to go long? And if we are, that's the best possible price.
And how do you decipher that? Because I mean, you're telling me that you use limit orders, and the reason, Ash, the reason that I'm asking you this is because uh, let's say 90% of my trades are triggered with stop orders because I trade breakouts. You know,
Yes.
I don't trade breakouts out of ranges. I hate that. I would never take a breakout out of a range. Let's take the DAX
Yeah.
example of how it has been trading inside of a range and how it has triggered longs and shorts just to hit the stop losses, right?
Yeah. Yeah.
I don't do that. I don't do
Yeah.
that, right? But when it comes to reversal patterns at key levels or continuation patterns at key levels, I do put. Let's say that I'm looking to buy a rally on any given market, and that market starts to print a bullish flag, right? I
Yeah.
am not going. I'm not going to just buy blindly. Uh,
Yeah.
the dip, what I'm going to do is I'm going to wait for that flag to develop and hit the previous broken level, just as you pointed out. But I'm not going to take that level as a buy. I'm going to wait for the previous high to break, because that confirms that the immediate bearish structure, which is the bullish flag, has broken and we are now in a continuation.
Yeah.
I I have been for the past couple of, let's say for the past month, of course on a demo account, I have been testing limit orders, and let me tell you that when it comes to retracement back to a broken level, um, they work. I mean, the risk to reward that you get on your trade is much better.
Yeah. Yeah.
But my question, I mean, but my question is, how do you define that we are going to continue on the current impulse and not
Well,
break below?
well, I suppose if we accept that that every single trade that we enter has a random outcome, then
Uh-huh.
in that respect, as you say, if the limit order has the best risk reward ratio,
Yeah.
and every single trade has a random outcome, then over a basket of 20 trades, the limit order should work out as the best possible place to get in. On a trade by trade basis, you're probably going to get run over. You're probably going to want to see some type of reversal. And don't get me wrong, if I'm looking at, let's say I'm looking at this daily here, and I've got the
Mm-hmm.
DAX. Now that if this was our area here that we need to break through, that became the best possible price to get in, just
I
there.
agree.
However, the conventional and safe way to do it would be wait for this engulfing bar and take the trade there, which would have also worked out. So much safer, a much safer place to trade, and it works out as well. So over time, you're probably more likely to win these ones.
Yeah,
So
but
if I look,
what I don't like about that is that the stop losses would be above that engulfing, below that engulfing bar.
yes,
And when you take that trade on a limit order, your stop loss should be below uh, the red dodgy.
yes, down here,
Exactly. So
yeah,
I mean that is more logical on a market structure wise than put your stop losses below the level that now has become a buy level.
yes,
You know,
yes, it
that's why
does,
I'm exactly that's why I'm exploring limit orders. You know, because it's
yeah,
more logical on a market
yes,
structure sense of the analysis.
yes. You're absolutely right. You're absolutely right. But the one thing about that is that one of the reasons I like that is that it could potentially give you a lot more time. So if I was to put my stop loss down here, or more likely, I'd probably put it along a trend line. If there was a level going along there, then I'd be more likely to kind of put it under here.
That makes sense to me too.
Yeah. So so if we were to put our stop loss under here, now because I am trying to get the best possible price, what that means is if the next bar does that, I come out,
Manually.
saving that. So yesterday, when I was looking at the FTSE, when I was looking at the FTSE, the trade would have been, and look at it go.
Look at that. Look at that.
Yeah, there's definitely a rally in town, isn't there?
Yeah.
The trade entry is here. The trade entry is here. So as it comes back again, I take the limit order here. And at this particular stage, probably the most sensible place for a stop loss is up here. So that means we've got this area as our risk. However, the real risk is if I'm saying to myself, or if I'm saying, if I'm telling that the market with a strategy, I have found the best possible price. If this closes above my price, as it did here, it wasn't the best possible price. So I close and I save myself all that.
Yeah. And I mean, what you are explaining right now makes such a difference on the long term to your bottom line. It's amazing. It's amazing the difference that being that disciplined makes on your overall profitability, because I mean, most traders would not close manually there, and they would just let their stop losses run, or price run their stop losses over, right?
Yeah.
If you take that exact same scenario on a vacuum and you let that happen, you're going to be burning money. And if you don't, and if you do what you just did with that exact same trade, it makes such a difference in your long-term profitability that I mean, it's amazing. I always say that even the biggest boats can be sunk by the smallest leaks. So
Yeah.
I'm always looking. I'm always reviewing my trades to and doing profitability analysis on my positions, finding markets that I'm not profitable in to just dump them, and finding these small leaks in my game, because I mean, if you don't do that, overall, you're not going to realize that you're leaking cash, right? And
Yeah.
you're eating on your profit. So that discipline, yeah, I mean, it's pretty amazing. I really like it.
Yeah, so if we were looking at this particular trade now, if we wanted to get into the FTSE 100, if we like the upside, which maybe we should do. I'm not just not keen, and I'm quite happy to kind of let this one rally until it's exhausted. Then what's the best possible price here? Well, the first thing we've always got to do is find structure. So I'd be drawing my trend lines. It's probably one there. I'd want to see probably sort of like something on some closing prices as well. So let's see what this one looks like. Fairly parabolic, that one. There's a parabolic one there. So I've got one on candles, and I've got one on close prices now, using this line chart. I won't love that one because it is so steep, but with the market so happy, maybe it's the one. Now the first thing that I'd be looking at here is to say, well, if that was to come back to there, then it's also going to test this area that it needs to break out of. So that means that if we put a stop order in here at this level. Not a stop order, sorry, a limit order in here at this level at 61.
Yeah,
in fact, let's say 6100, because as you say, that is a really strong level. So we've got everything really lined up for 6100 now. We got a trend line, we got a breakout point. That, to me, in this current in the state of the market, the way we're looking at it, is the best possible price. Yeah. Now the stop's going to be down here. So let's say that's going to be, yeah, because because we don't need it here. Because what I'd like to do here is say that if that is my 1% down there, if this market closes all of a sudden, like, let me make sure I've got my arrays. So we've defined the risk down there. Let's get rid of that. risk is
all the way down there.
Down to there. That's our risk. However, if this happens, takes out that low, my analysis was wrong. You know, my price is wrong. That's not the best possible price because now there's lower on offer already. So I'm closing up here, and I'm saving at least half of the money there. And then I've got this.
You wouldn't let your stop get run over. You would stop. You would close manually. I understand now.
Yeah, close manually, exactly. And then if it comes down to this point, that's my new point of analysis. I'll maybe put another limit order in there. And if it breaks through there, then at that point, it looks like price structure may well be reversing. So I'm no longer bullish on the FTSE. So, you know, I'm trying to pick out maybe areas that I'd want to go long. And that would be certainly one of them. And that would be the other.
Yep. I mean, I really like the way that you look at not the market, but the way that you manage your trades.
Yeah.
It's pretty optimal, mate.
Yeah. I mean, it's because really, it's all about money management, isn't it? At the end of the day, yeah. I mean, it's
exactly money management and probabilities. That's it. That's the game.
And probabilities, yeah. So it's mathematical, and if we are working in probabilities, then we have
to. Yeah, go ahead. I'm sorry.
We're just sort of like trading a not something which is actually going on, something which is probably going to go on, you know, exactly. Because that's what our system dictates. So yeah, Shukri's saying this is why he uses limit orders in cryptos, and I think with cryptos it's a really good example. It's a really good example actually, and I would also say that if we think about what the professional traders are doing, what the market makers are doing, they're also trying to buy the best possible price. So
sure.
if they are causing those turns in the market, then they're picking it up on limit orders. You know, yes, they will probably add to their position, and that's something that we can obviously do with stop orders. You know, add to a position if the market goes through. So there's definitely, for me, there's a place for those stop orders, but I think for the first trade particularly, I really do like a limit order.
Yeah, I do. I mean, I see where you're coming from, and it totally makes sense, you know. And that is exactly what I am working on now. But
yeah.
you know, but this rally is amazing at the moment. I mean, global equities are up more than 1%. Well, not global equities, but the DAX and the FTSE up more than 1%.
Yes, yeah. The one that I find the most interesting is the Nasdaq. You know, the Nasdaq is not having anywhere near the same joy as the others have been having recently, because the Nasdaq is caught in this crossfire between the US and China. And is exposed to that crossfire with the US and China. Yeah, they are all shooting up. We are getting a rally in global equities today, which, you know, it kind of makes me think one of two things. The first thing it makes me think, looking from a contrarian point of view, is it a trap? You know, because I still don't have my reason for this market rally. And the second thing, obviously, I think is this looks like it'd be a great one to be on board because it's easy money. So you know, it's
yeah, but the thing is that the other question is that I mean, has the train left the station or not? You know.
Well, it rarely has, isn't it? I mean, it's rarely one opportunity and done. And you know, we do seem to be having this this crazy euphoric move to the upside, but it's the euphoria that tends to create the bear markets or the down moves. You know, these kind of highly liquid upward swings. It's almost what the sellers need to get out of their trades, and those market makers can create it by bidding everything up. So everybody starts jumping in, and then all of a sudden they're dumping all their stuff off on everybody else because they don't want it anymore. So I'm
Yeah,
always a bit cautious with this stuff.
and returning to the Nasdaq, I mean, it's pretty interesting what you said, how it's exposed to fundamentals, right? But just looking at technicals, Ash, I mean, the 1160 level on the Nasdaq looks like the breakout retest level that that we should be looking at.
The area we're in now. Have you got a chart you want to show me? I don't know if you've.
Yeah. I'll show you my. I'll share my
Right,
screen.
let's have a look. I don't know if you've got powers to be able to do that. But
No,
let's
give me
see.
powers. Give me powers.
Where are we at? There we go. Right, you are there. Now, what can I do with you here? Make co-host. There you go, mate.
All right. Hold on. Let me share my screen.
Yeah, pretty easier.
Yep. I don't have problems with modern apps as you do, Ash.
Oh, interesting. I just seen the headline. Gold drops below 2,000.
Yep.
Wow.
And I'm pretty happy because I shorted gold yesterday.
Oh, good stuff, mate. Good stuff.
Yeah. And I mean, it's a pretty risky play to be shorting metals in the current market conditions and the current market reality. But I'll show you why I did it in just a second. But this is the level that I was talking about. On the Nasdaq, that 11,160. I mean, looks like. I would never put a buy stop order above these levels. Never would do that. It makes no sense to me to do that. But what I would do is just wait for that retest with a risk below this low. And this is what I was telling you about on the DAX, and the reason that I don't like trading ranges breakouts. Just look at this. I mean, here buy stops were triggered, boom, back down. Here sell stops were triggered, sell stops were triggered, buy stops were triggered, and back down. So yesterday I was. I mean, if you see here on my chart, I have this alert on the DAX where I had a buy limit actually, Ash. But I wasn't sure that the DAX was going to come down to the bottom of that range because of this. I was looking at this. This is the DAX futures, and just look at this massive volume zone at the middle of that range where it spiked up. I mean, I didn't take that long because there was no setup for me right here to buy the DAX. But that is exactly the level where it pumped up from yesterday. And
that's interesting. So that's volume profile. Have you got there? Is it?
Yeah. I mean, I do use volume profile just to pinpoint key zones. I don't use it naked in the sense that I don't use just the volume profile for my entries or exits. I use the volume profile when it confluences with key levels, Fibo clusters, structures, etc. That's why there was no setup for me here to buy the DAX. I mean, I could have bought the DAX here with my stops below that low, but that didn't make sense to me, and it's not according to my rules, so I did not take that trade. But it's mostly in futures, volume zones, or value zones, or zones with historic heavy volume tend to be key zones where price is going to be reacting at. Yeah.
Is that free? Is that volume profile free with TradingView?
No, you have to be. You have to pay the membership. I mean, but it's not that. I mean, it's not that much, and it's pretty useful. I really like TradingView for charting. It's pretty handy, and it has all markets. So this is the reason that I took that gold short yesterday, and I mean, it was actually, I was triggered. I was triggered. Well, for me, yeah, for me it's yesterday. So yesterday around noon, I was triggered here. I had a sell stop below these levels, right? So let's imagine that I'm looking at price action right here. It looks pretty bearish to me, yeah, you know. And I was talking to a couple of friends, a couple of trader friends, you know, and they told me, you know, this is a flat triangle, dude. I mean, price is going to just blow up, and my reasoning here, Ash, was this one that this move was really overextended,
Yeah.
and you know, topping
Yeah, and you got a
at
rising wedge there. That's another one of my favorite patterns.
that is my favorite pattern, you know, Ash.
Yeah.
That is my favorite pattern because it gives you a great risk to reward,
Yeah.
and you can really pinpoint turning points in the market with rising on and rising wedges. I did
Yeah.
not take that trade because it was non-farm payrolls, right?
Yeah.
I
Head and
wasn't going
shoulders
to
there as
trade
well, we see. Interestingly.
where. Yeah, right here.
Yeah. Yeah.
Exactly.
And look how you could have picked that up on the right shoulder, just out of the rising wedge. It's a perfect time to pick it up on the right shoulder.
Perfect entry. That exactly. I saw that perfect entry. I wasn't in front of my charts, and yeah, I mean, I would have taken that retest, but like I told you before, I wouldn't have taken it on a limit order or a market
Yeah.
order. I would
Yeah.
have taken it with a sell stop below this low,
Yeah.
which is, I mean, that increases a little bit. Not, I mean, the risk that I would be taking on that trade, but I mean. Actually, it doesn't increase the risk because I mean, what would have happened is that my position size would have been lowered, you know, or exactly. But the thing is that I was looking at gold here, and this to me was not a flat triangle because we were on a bearish move, right? This is a continuation pattern. So, and this is why I also like stop orders, because should I have taken the trade at this level, I would have been taken out on a loss, right?
Yeah.
Uh, and because I was using stop orders, I didn't get triggered, and I only got triggered when we came down here. And I'm still on that trade. Yeah, targeting these highs. And I don't know what you think about this level, you know, because I mean, of course, we are. I mean, I'm not going to hold on to this short position in gold, wishing that we're going to hit the 1800 level, because that's not going to happen. That's wishful thinking. I mean, that's wrong. You can think like
Yeah.
that.
Yeah.
But the thing is that I love this spot for a buy on
Yes.
gold.
Yes.
The 1980 level. The 1980 level is so yummy to buy gold. Just look at this FIBO cluster, uh, and if we go to yeah, to, oh boy, hold on, to gold futures, it's this is exactly where we have the point of control. This is where we have the most volume traded of all the volume of the last impulse up. So this acts as a trigger, you know.
Yeah. Yeah, I like it, mate. Do you know?
Yeah.
And it's only you know, just from my perspective, because I think the likelihood of a run to the upside in gold is probably likely to continue, maybe even into eternity. Who knows? Um,
Uh-huh.
as you've got that short, and if I was in a short in the market, my first thought would be, I'm going to put in my limit order. I don't care about the price patterns. I'm going to put my limit order in down at that 1977 area. I'm going to buy in there. I'm going to put my stop on my sell order at break even. If it goes up, takes my sell order out, my sell position out. Then I put my stops at break even at 26.
That is exactly that is exactly I mean, that is exactly my trading plan, you know,
Yeah,
to
yeah,
hedge my short at this level.
Yeah, yeah.
You
And
know,
then if it goes
so
through, then you just say, okay, well that's it, trade done. I close both positions, and I just take the profit from the sell to the buy. Then you don't get caught in this kind of crossfire trying to pick it up where it's going to turn. It's a free trade, isn't it?
exactly. Right now it's a free trade. Right now it's a free trade. So my trading plan is to to buy at this level,
Yeah,
with my stops below these lows, and of course holding on to my shorts from here, right? So if price breaks with the 1980 to 1970 level,
yeah,
right, I'm going to be taking out on a small loss
yeah.
on my long, but I will continue to hold my short
Oh, okay.
and
Yeah, yeah,
to hold my short and to move my stops at the previous at the previous structure high, and
yeah.
that's it.
Like that too.
And
Yeah,
exactly, and if we break with this level and we retest it, I might be tempted to add on that short, but that's my trading plan, because one this move to the downside is quite strong, and I know that just by looking at these candlesticks, you cannot tell that it's a strong move to the downside, but in my mind, it is a strong move to the downside just by looking at how strong the move to the upside has been,
yeah, yeah,
So after such a strong move to the upside, to have this move to the downside, it tells me that at the moment bears are in control. But this, of course, is my buying zone. So I am going to, well, if we hit that zone, right? No one knows what's going to happen, and if anyone tells you that they know that the price of gold is going to hit 1900 in the next few weeks, well, they're lying to you because no
yeah,
one knows.
yeah. Nobody knows. Yeah,
Exactly. But I'm prepared, my trading plan, and I'm prepared to buy here at this level, right, with my stops here. So whilst holding my short, and holding my short, and of course moving my stops lower at the next structure as the next structure high, and right, if price in fact bounces and rallies from here, that's awesome, because I'm going to be in profit from that long position, and I'm going to be taken out on a profit on my short position. And if price breaks with this level, right, I'm going to be taken out on a small loss on my long, but that small loss is covered with my current short position.
yeah,
So that is my plan.
yeah.
That is my plan.
I like it. I like it. I think that's a really good trade. So you got short on gold, which is and this is the thing, isn't it? We've seen some dollar strength come into play. We've seen the euro as
Yes.
well. I've got a short on the euro actually from where's my price on the euro? I've got a short on the euro from 118.34, which I didn't love my entry, but it's worked out so far very, very well. And the dollar has provided some strength. Now, when looking at the dollar, I do look at the dollar index. But the other thing that really interests me is the crypto space. And
Really?
because we're looking at dollar kind of dollar assets here. Everything kind of like paired up with the dollar, and
Mm-hmm.
the crypto space. I don't know if you got cryptos on TradingView there, but
Yes, I do. I do. I do. Hold on.
well, if you bring up a chart of a
Yeah, mate.
either Bitcoin or Ethereum, maybe more so Ethereum actually.
All right.
I find the messaging on something like Ethereum and Bitcoin just fascinating, because we don't see the same weakness in these cryptocurrencies as we do with the dollar. Sorry, with gold and with the euro. These it's holding up really well. It's had
Mm-hmm.
an amazing rally to the upside, and it's holding up really well there. So even though there is
From
some
these
dollar
lows
strength
to
going
these
on,
highs, it's a 78% rally to the
oh,
highs
it's
from the
crazy.
lows. I mean, that's insane, Ash. That's
Yeah,
insane.
yeah. Yeah, it is. I mean, the move has been pretty parabolic, and that's got plenty of room as well to get to all-time high. So I'm still liking
It
Ethereum.
isn't
It's,
in all-time highs.
no, nowhere near, nowhere near. We got another.
Oh, all-time high. This is Ethereum. So all-time highs
Yeah,
in Ethereum are 1600.
crazy, right?
Wow. Thank you for pointing this out to me. And just take a look at that level that we are right now.
Yes. So
Let's
it's got to
see.
get through that. I mean, what that does suggest is that retracements will be bought up, and that's what I'm looking at with Ethereum. Yeah, it could break through, and then we try and get the same
This is
price.
what you're looking at to do. Just
Either
the
way,
break.
I'd like it back. I'd like it back. I'd like it to come back to that previous that area.
This
That's what
one
I'd
right
like.
here.
Yeah, yeah, yeah. Anywhere there between there and 300, I'm all over it. I really do want to buy Ethereum, but this is just an awful price for me. I mean, this would be expensive, and as I say, if our
Yeah.
job is to find the best possible price, now ain't it? So
No, it
so
isn't. And you would
coming.
never take a short from here at all.
No, I wouldn't take a short because I've got no faith in the dollar, and I've got quite a lot of faith in in this crypto space right now. So it would go against my worldview, and I can't do that. If I I will trade on for technical reasons, but fundamentally, I will always trade on what my worldview, what my beliefs are of the
For sure.
world.
I
So
agree.
that's why it's difficult for me to take an indice long at this particular stage because
Yeah.
I'm just waiting for a crash. Now that doesn't mean I won't take a trade long if it was on an intraday basis, but it won't be something that I'd want to hold on to, and I'd really like to hold on to Ethereum if I can get into it. Um,
And
and it's probably the same with gold.
aren't you worried with this week right here that the retest of the 300 has already happened?
Yeah, I am, mate. If I'm honest, I don't think I'm going to get it. But if I don't get it, then I will go in at 400, but only on a break and a retest. So I'd want it to be the low price rather than the high price. So at this stage, it is a high. If it becomes the low because it is a retracement, then I
Mm-hmm.
will look for it. So yeah, I am, and I think that if I'm honest, when I look at the crypto space, I did try and buy something called Cardano a little while ago, and I got a fantastic price, really, but I traded it with a stop, and I got stopped out on it, and it's already doubled in
Mm.
value. So that's up 100% from where I got in, pretty much. Um,
Wow.
so yeah, you do tend to kind of like miss these if you manage them too tightly. You've got to kind of give things a really loose stop. Um, so
and
yeah,
and also use buy I mean limit orders like you said, because I mean to catch this very quick retest of a
yes,
level.
yeah.
I mean there's no way that is going to print a wedge here for you to take a break out of that wedge.
Exactly.
I
Yeah.
mean if you're not in front of your computer, or if you don't use limit orders, very very difficult that you're going to get that retest.
Yeah. Yeah. It's kind of forget it, isn't it?
Yeah, but I do like um the upside on Ethereum.
Yeah.
The thing
Same
is
with
that
silver.
Ash, I mean, of course, silver, and please don't mention silver to me again.
Oh yeah. See,
No, but I
it's
mean, yeah, but that's fine. But yeah, but silver also has a huge potential to the upside.
yeah.
Uh, I mean,
Yeah.
you have to go to the weekly actually just to look at it. I mean, we are kind of halfway there, but there is so much potential to all-time highs. It's
Yeah.
crazy. It's crazy,
Yeah. It
right?
is.
And if we look at the gold silver ratio, I mean, who is leading this rally is silver.
Yes.
The one, I mean, the metal that is leading this rally is silver. That's I mean, and I don't look that as a gold weakness at all, at all. I look at it as a full on strength on silver. But the thing about silver is that it has broken with so many levels without I mean, this is the
Yeah.
weekly chart. I mean, this is a weekly chart. But if we go to a 2-day chart, what is this? I don't know. I mean, if we go to a 2-day chart again, I mean, there was this retest of that level. But I mean, it is a 2-day chart, but intraday it's pretty tough to take that buy, because I mean, you're going to see uh, it doesn't print continuation patterns. Or I mean, if you're not in front of your charts, it's going to be very, very difficult for you to take it. Actually, this was I stand corrected, because this was a crazy, I mean, a reversal pattern at this level. But I mean, I must have been, this is the gold silver ratio. So this is not the silver chart. So um, just forget about everything I just said.
Yeah, but we want it, you know.
Uh-huh.
So sorry, Mudlia. So I'm just looking at some of the questions in the box.
Yeah.
Ash, on the Dow, there is a monthly strong bearish pin bar. Is it invalid? Let's have a look at that in a second. Sudden surge in shots. Great man. This is why cryptos. Ash, your trading style of using limit orders means you need to be certain. Yes, exactly, Sino. Otherwise, when price comes against the initial direction, it will trigger the limit order and move in the opposite. Exactly. And my basis of making a decision is a fundamental basis. You know, I mean, when it comes down to technical analysis, I use technical analysis for timing, but that's not what makes my choice and my decision. And I'm still wrong. You know, well, FTSE 100 from yesterday is case in point. You know, my fundamental view is that we should be looking at lower, and we are rallying harder than I've seen in about a month. So I'm still wrong, and that's just that's just the way that it is with trading. Nobody is right all the time. It's just trying to find a methodology which over the long term makes money, and not worrying about trades on a trade by trade basis.
Exactly. You cannot be results oriented.
Yeah,
Well,
exactly.
I mean, in the sense that you cannot focus on the results of one single trade.
No, you can't. No, you can't.
Exactly. I mean, that's what I mean when I say that you cannot be results oriented. Of course, you have to be results oriented, but you cannot take everything on a vacuum. You know.
No, exactly. I'm just going to just quickly take the screen for a
Yeah.
second
Go
here,
ahead. Go
mate.
ahead, mate.
Just to kind of deal with this question about the pin bar.
Yeah. Go ahead. I'm gonna go. I'm gonna go. Just quickly make a cup of coffee. I'll be back in 5 minutes.
Great stuff. All right, buddy. See you in a bit.
All right.
This pin bar, is it valid? Yes, it is. Yes, it is, but it does. Things need to unfold. What we know from this pin bar, in fact, there's two things really going on here. What we know from this pin bar is that there was some weakness around about this price here at 27,628. Now we're 300 plus pips above that, which is around about 1% higher, a bit more than 1% higher beyond this particular pin bar. So the likelihood is that there's been a lot of stops taken out of this particular point. Now, if people are trading this, the conventional way to trade this particular pin bar would be that that you would enter the low with a stop at the high. Now, the low hasn't been seen, so that means that there aren't any trigger. You know, people's trades aren't triggered in here so far. Now, there will be some stops sat up here, but on a completely different basis, you know, intraday basis or whatever else. But for right now, these stops haven't been triggered because people aren't live in the market. So there's not as much liquidity here as there would have been if the price had come down first, taken everybody in, and then gone back up again, because then that would have taken out stops, and then who knows what could have happened from there, or who knows what could happen from there. It still may happen. So we know there is some weakness in this particular area. You know, the people that were selling here, they maybe are out of their trades. Maybe they've cleared out by now. I don't know, but it does suggest that this whole area. Now, if we're thinking about this on not a monthly, but just on a price chart, so this could be on a 5-minute chart, it's telling us that this area here would potentially have some weakness. but it could still touch this point, and then we open here, we come all the way up, touch the point, then we can start to come all the way back down again. So it's possible we get another pin bar. Now, I don't particularly like August for a rally, but that is currently what we've got. But we have to recognize that we are looking at monthly bars here, and it is only the 11th of August. So we're not even a full 2 weeks in to the trading month as yet, to make an assumption of how August will eventually go. But it has been an amazing and an astonishing move, not less so because of the season that we are in. The seasonality suggests that these are our weakest months of the year, and yet we've had currently August, we've had July, June, May. So May, June, July, August, the move to the upside in the Dow has been probably near, well, it looks like about 15%. There's a 15% run to the upside in those 4 months alone. But we're not through yet. We're not finished with this month. So yeah, we can utilize this as a bit of information, just to tell us that there is potential selling in this whole block, in this whole area up here. But it's not necessarily a trigger unless we get under it. So while we live above it, then there's not a lot to do. But actually, we could utilize this as a potential for an entry. And what I'd want to see with that on a daily basis is for price to break down, come up and retest it, but not get through. And then, Jeff might even take the short end of that, but we could even sort of like see if we can get it lower. So this point here is is still in existence. Now, the fact that we took it out yesterday is a bit problematic, but it's possible that this is still a false breakout. It hasn't happened yet. If this holds for 2 days, really, I think the signal with a pattern is, if it gets 5% above the price that it's breaking out from, then the breakout is confirmed. 3% above the price, then the breakout is confirmed. 3 to 5%, the breakout is confirmed. Or if it holds for 3 days. 3 whole days, the breakout's confirmed. So at this particular stage, this area becomes a buying opportunity rather than a selling opportunity. But it is an area of interest. So all we've really got with that pin bar is not a message necessarily of strength or weakness. We just have a level of huge interest here that we can do something with. No problem, Mulia. So really, with it, you are always looking to see, because at this stage, that price looks to me that the 27,600, I guess, slightly lower, but it's around that area, looks like the best value. At this stage, it looks like the best value that we can get. But it could end up being a high, and the only way that we're going to see that is if price breaks below it first. Now let's just have a quick look to see if there is anything else. You see, there are, and this is the thing with technical analysis in many respects, and this is the difficult thing about limit orders. And I don't want to kind of fool anybody into a false sense of security that it's the best way to trade for safety, because it's not really. It's not a particularly safe way to trade, because you've got to be very certain about your direction, as Sino says. Now, looking at this, it looks like if this market turns here, then we say, oh, brilliant, we found where it turns. But wherever the market turns, you will find a reason technically that it has turned there. Just when it looks like there's not one, there will be a technical reason that it's turned there. This one down here. And it's always in retrospect. Right, well, it's not there. Let's bring this level up and use that instead. So there we go. You got a horizontal level there. Horizontal line, break, retest, horizontal lines. That's a surefire one there. But if you were trying to pick out, if you were sort of like thinking that, I want to go long this market, and you were trying to pick out the best point to go long, ultimately you're going to be going long. You're going to be going long here because that's a structural point there as market bounced. You're going to go long here as it falls. You're going to go long there. You're going to go long here. You're going to go long here. You're going to go long here. Now, eventually, you're going to be right, obviously. And the way to trade that is just to make sure that, that as soon as you're wrong, you are out. Because the interesting thing about these limit orders is that if you are right, the likelihood that they turn within a pip are pretty high. So let's say we did go long here and we closed off. Now we'd want to make sure that this one comes down there. That one's the next month. And actually there's two here on the months here. There's another one here on the month, and then there's that one down there. Now if we flip this to a daily chart and see what was going on. So our first point is here. Now if you get in here, price closes below, you close off. So you know at this stage you maybe your stop is a bit further under, but that first one would lose around about 400 pips. And then we're trading off monthly charts, so we're not too worried about 400 pips. The second one closes off, and it's quite a big one actually, more like 1,000 pips. The third one, massive, 2,000 pips. So we're losing a lot of money right now. And then this fourth one, well, it'll be a difficult one, but you'd be probably closing down there. That's another 400 pips, and then eventually you get your you're in at this point. So at this stage, we are 4 plus the 1,000, that's 1,400, plus the 2,003, so we're 3,800, 3,800 plus another 500, let's say. So about 4,500 pips down at this particular point. Then we get in here, and the market is up there. So you're 4.5 down, but you're nearly 10,000 up. And that's just an example of, you know, the way you could play it on a monthly chart.
And after that trade, you can just chill out for the rest of the year.
Yeah, I mean, to be fair, if the trade was picking it up, going down, picking up, going down, picking up, going down, picking up, going down, picking up, going down, and then it goes up, at this stage you're only 2.5 to 1 up. So so it's not all that lucrative. And when you think that we are where is that? That's the end of that's the end. In actual fact, that's February until August. So February, March, April, May, June, July, August. So we're 6 months in. 6 months to take 2.5 to make 2.5% is not a great return.
That's right.
And you would have had to go through a lot of anguish every time it closed down there, and you're closing it off again and closing it off again. So yeah, you know, it is a way to trade, and you know, by no means is it the correct way or the way that I'm promoting. I'm now trying to show you the pitfalls of trading limit orders. Not necessarily as lucrative as it could be, and certainly not as safe.
And also what is so hard to hold on trades for months over months, you know.
Sorry, mate. So it means you have to hold on to trades for months.
No. I mean, it's so hard to hold on to your trades for so long.
Yeah, absolutely is. Yeah, very difficult, very difficult. And maybe, you know, it's back to whatever makes money, isn't it? You know, if ultimately you're making money on holding on to trades for a short period of time, it doesn't really matter.
It really doesn't.
But as long as, you know, when you do your journal, then you analyze it and say, actually, I could have held on to all these trades for an extra week, and I would have made an extra 10%. Then that's when you have to start putting it in. So, you know, this is the point with trading, isn't it? It's not, the work is not just let's pick up a chart and pick an entry. You know, it's far reaching than that. You know, it's much further reaching than that. It's working on your psychology. It's working on your timing. It's working on your exits. It's working
your
on
management.
your environment. Yeah, your management. You know, there's so much to it that that we can't just say I can teach you how to trade by by trading this pattern, which is really why I don't like these online adverts that kind of like have this really fancy guy or girl in front of the screen, kind of giving us
Uh-huh.
the Hollywood bullshit
Yeah,
about
I understand with the Lamborghini on the back.
yeah. Yeah, it's just not accurate.
It is not.
It's a job like everything else that you need to study, and most of the studying that you have to do with trading is on
Of
yourself.
charts.
And yeah, no, it's not even. I mean, I don't find that anyway. It's not even sort of like on the technical side of it, because you can teach somebody how to read a pattern quite quickly, but teaching somebody how to understand their emotional their emotional equity that's involved in trading
Yeah, that's what I
is
said. Of charts.
off
Of
charts.
charts.
Yes, yeah. That's where the work really happens. And
And that is why, I mean, everybody that can open an account, fund it, and click on a buy or sell button can call themselves a trader because they have placed a trade. But
yeah,
that is not it. I mean, this job is really, really 3% execution and 97% a lot of back work, and
yeah,
mostly with yourself, because and what you're talking about, it's quite interesting because back in the day when I was struggling, just for starting and was struggling, I realized quickly that the mindset that you get on when you sit down in front of your charts is, I mean, is super important,
yeah,
uh, uh, learning that losses are part of this game, and uh, the one thing that trading has taught me, and now this is the way that I am, is thinking in percentage and probabilities. Trying
yeah,
to just focus on what I can control, and take the optimal decision on any given situation, and that's the only thing that you can do. And if I mean, if you trade, I mean, if you trade your system, and you have back tested your system and forward tested your system, and you know that your system is profitable, you I mean. It's such a release to not care about the losses, because you know that over time it evens out, and you're going to be making money by taking that same decision that you took that might have been a losing trade.
yeah, yeah.
I mean,
Exactly.
it's an amazing job, this, because not I mean, it makes you completely evolve on the way that you approach situations in your everyday life. I mean, that's
Yes.
that's at least to me what has happened.
Yeah, I agree, mate. I agree. Yeah, it is the case, isn't it, that you are trying to understand your life decisions in probabilities, and
Exactly.
actually it does help you when you kind of get your head around that, but kind of working on your mentality is key, really, to
It
kind of
is key.
success.
And the other great thing about this is that, I mean, eventually you're going to meet an awesome dude from El Salvador.
Yeah, which what could be better than that, you know?
What can be better than that? I mean, praise the Lord.
This is the more bonuses. It's the gift that keeps giving. Um,
Exactly.
so Siner's asking, I've now I don't know if you've heard of this, Orlando. I've read,
Yep.
not sure, I have not used. MT5 has stop limit order, which means you can enter a limit order after a stop is triggered. Is this
Yeah.
true?
I don't
If
know.
so,
I've never traded on MT5.
I haven't traded on MT5 either. And if so, why 80? When you say you can enter a limit order
Yeah, I don't
after
understand
a
that.
what do you mean by that? So could you expand on that, Sino? What do you mean by you can enter a limit order after a stop is triggered? After a stop is triggered, does that mean that are we still on my screen? We are, aren't we?
Mm-hmm.
Um, after a stop is triggered, does that mean?
After a stop order is triggered, or
Oh,
after
I
this?
see what you mean. So you enter a buy stop, and at the same time a buy
Sell
limit
limit.
goes into the market. So
Ah,
if it goes up, it comes back again. You can get in again. Is that what you mean? I mean, if that's the case, firstly, that sounds very dangerous because you don't know how far it would go up. Yeah,
I see.
limit order is on MT4. What Sino's talking about is like a double function by the sounds of it, like a double something that happens in conjunction. So you buy maybe I think if I'm right, it would mean
In
that
what situation would you use that order? I mean, that stop limit order.
is a stop limit combo of a stop in. Does that mean so you like this? So let's say you got your bar, you got your buy stop there. There's your buy stop, and then price goes up through your bar, so your buy stop is triggered, and then
Uh-huh.
straight away, when it goes up, then the limit order goes in as well. Is that what you mean, Sino?
So when you're triggered on your buy stop,
Yep,
a limit order is placed at the same level that your buy stop was triggered. So
I
if
think
price
that's what he's saying.
retraces back,
Yep,
you get in on a buy again.
yep.
Why would you
If
do that?
I don't know, I don't know if that you actually enter the limit order like your. Oh, I see. But it will only trigger when a set stop price is hit. I see what you're talking about. I know what he's talking about. Okay, so what he's saying is this. So price is going up here, and let's say we're going to put our limit order in here, and price comes down, but it doesn't trigger our limit order until there. So it doesn't trigger it on the way down, it triggers it on the way
The
up,
way up.
which I like actually. That sounds like a pretty good. The downturn in the FTSE was about 6 minutes. Yeah, it'll come down, mate. It'll come down.
Gold is crashing right now.
Is it really? Oh, on
Yeah.
Ethereum.
Right now, gold is down
Well, it makes a lot of
2%.
sense for gold to be crashing because if we are seeing, yeah, wow. Is that gold? No, sorry, that's the wrong chart. Where are you gone? There you are. It makes sense, that the rally that we're having in stocks, if a lot of people have basically bought up their gold to protect themselves against the stock crashing, and stocks are all of a sudden in this kind of this area of euphoria and just all out buying, it makes sense to gold to suffer. With a little bit of dollar strength and a lot of equity confidence,
Yep.
gold
Yeah,
would probably be the one to suffer the most.
I agree with you. And right now we are hitting that 1980 zone. Right now at 1985, 1986. But with this such a bearish moving gold, I don't know if I'm going to be hedging my short just now. I would like to see some kind of a reaction to that level before doing. I mean, before
Yeah,
continuing
I
with
agree,
my
mate.
trading plan,
Yeah, I
because
agree.
this
Way
is a
too
very
early, isn't it?
strong. Yeah, way too early.
Yeah, momentum is very very strong to the downside. You think there'll be a bounce fairly soon, but it might be short lived. Difficult one, isn't it? Because you have a plan, and really by rights you should follow it, but
But you know what? I mean, I always enter the market with a plan, but I mean, it's going to it's going to sound counterintuitive because of what I'm going to say, but I don't follow it blindly in the sense that,
yeah,
for example, right now, Okay, my plan was to buy gold here, but I mean, this move is to the downside is so strong
Yeah.
that the probability of getting stopped out on a buy, if it continues the way it is right now, is
Yeah.
high.
I agree.
So exactly. So, but if I see some kind of a reaction to that level, the probability of a bounce increases. So I
Yeah.
would be taking that long. I
I
mean,
agree, mate. It's one of those things, isn't it? You sort of like you go into the situation with a plan, but when the situation
uh
changes, the plan has to change.
exactly. That
Yeah,
is exactly what it is. And
I get it.
you mentioned that you have a short on the euro, right?
Yes.
I have a short on the
Uh,
pound versus the US dollar, which is I mean, my stops are a break even right now, and I took that at the 131 level, But I mean, sterling is so strong at the moment.
yeah, yeah. I mean, with the dollar, it needs some relief, and I suppose that's the thing with, and it's no different to what we've seen with gold. That all of it needs a bit of a relief, and it doesn't mean that gold's
Hmm.
all of a sudden turning around and going bearish. I think it's just because the move to the upside has been so parabolic, inevitably the move down is just as hard. Um,
Hmm.
and it'll catch itself fairly soon. I think gold is really a space I'd still love to be in. So I'll wait and see if I can get into some gold at some point, and hopefully that will be the case. We'll see. Um,
Yeah.
so, Sino, I really like that. I really like that. What you're saying about that sell stop limit, if you like. In a way, it's basically a buy stop, because all it is that you're getting in on a way up. But it's just a buy stop with less work. So I do get it, and I could see the benefit of that. Um, it's not a big enough reason to move to MT5. I don't think. I think
Hmm.
MT4 is serving well enough at this particular stage. I think you could probably invent an EA or write an EA that does exactly the same thing.
Definitely.
Um, he's Siner's asking about, but I appreciate the question because it's a fair one, and I think we'd have to look a bit more into MC5 to see whether it is worth it. Question on silver: is it likely to follow the move to the downside that gold has enjoyed? And if you look at the parabolic move, it would suggest it probably would. But what do you think on that, mate?
Well, like I was telling you before, with the gold silver ratio chart, I mean, right now silver is super, super strong, and it's the market that's leading that rally in metals at the moment. And let me just go to my chart.
Yeah, good luck.
Yeah, hold on, because I can find it. CFDs, silver. That's it. So let me grab the screen for a second. Right here. So this is this is where I'm looking at silver, and this is the level that I was looking for a buy in silver. But the thing is that, and let's compare the two moves to the downside. So silver from these highs has moved to the downside about 5.4% from high to low, right? But if we go to gold, from high to low, right here, it has from this high to this low, it has moved, 3.3%. So that wasn't the result that I was expecting. So let me rephrase my train of thought.
Silver is retraced harder than gold.
I mean, in percentages, right?
Yes.
It has retraced harder than gold.
Do you know what that
Uh,
tells me? Do you know
yeah.
what that tells me is that if we are bullish on commodities, we should be trading on metals. We should be trading silver because it rallies harder. And if we are
Hmm.
bearish, we should be trading silver because it rallies harder. If you like, so silver still becomes the trade in some respects. That the moves are much more likely to be aggressive.
Yeah, definitely, definitely. And this is the level that I was looking to go in on a silver long, around the 2780. But because I had that short in gold and I was expecting a further move to the downside, that stopped me from getting long here. And you know what? And I thought about this, and let me and tell me what your thoughts about it. You remember my trading plan in gold to buy gold at the 1980, which is a hedge on my short, right?
Yep.
It occurred to me that I could hedge my short in gold with a buy in silver at this level.
That I
But
would prefer. Yeah.
yeah, and in hindsight, hindsight is 2020, of course. That would have been the best hedge on
Yep.
my short. And
Yep.
I
Still a
mean, and
possibility.
it
I mean,
is
it's only
still a
one day,
possibility.
1 hour, isn't it? It's just bounced over an
Yeah,
hour,
this
so
is
it could come
yeah,
down again.
exactly. And if you look at this candle, I mean, this candle is going down, right? On my charts, the red candles go up. So don't
Oh,
get
really?
yeah,
Oh,
the maroon candles are bullish, and the other candles are bearish.
oh, interesting.
Exactly. So this 1 hour candle is kind of, I mean, it's a bearish candle. It hasn't closed yet. I mean, it just opened about 15 minutes ago. But if we manage to get down to this level again and get another kind of a rejection of it, I actually would prefer to hedge my short in gold with a long in silver from the 2780
Hmm.
than the 1980. But but the move to the downside in gold is so strong that I'm going to hold on to that trigger finger and just wait for a reaction. I mean, if it bounces up very quickly and I don't get in on a buy, that'll be fine. That'll be fine. I'm still going to make a profit on my short, but because of well, not how strong the moves, but all right. So gold just hit my buy area. Talking about that, but because of how bearish this move has been and how bearish the moving gold is right now, I'm really going to hold up to see some kind of a rejection because I mean, if you trade gold, you know that the spike lows can be quite hard in the sense that I mean, if you're going to try to catch a buy at this level, it really doesn't make any sense to put your stops below this low because it's very likely that you are going to get stopped out
Yeah.
on a spike low.
Yeah.
And if I were to enter right at this level, I would have to put my stops maybe below this low, and that would make my risk too wide in a risk to reward scenario to first target, which should be the previous high around the 30 level. So yeah, I'm going to wait for a reaction on that one. But
Yeah.
but I prefer the hedge on silver than a buy in gold, actually.
Yeah, and silver, we're only on Wednesday, but if the chart was to end now with a price now on a weekly chart, it looks like there's some further weakness coming into the rest of the month.
Yeah.
So I think that's also to be taken into account.
Yeah, I mean, exactly. Let's remember that this is an hourly chart. So I mean, if we go higher on time frames, and if you look at this as a double top, just on looking at technicals, if we break with this low, which would be the neckline, right? I mean, the downside could bring silver to the 25, 50, 26 level. If we calculate the from the high to the neckline and we extrapolate it to the breakout, it's even lower, right? But
Yeah.
if we break with this low, we could definitely see silver touch the 26 area. So uh, yes, actually, a blind buy at this level will be high risk, and But again, we don't know what's going to happen. We can't, I mean, there might be a super reaction at this level, a lot of buyers coming in, and of course, a turnaround and a continuation higher. That's why I'm just going to keep my eyes on that chart and on the gold chart to see what I'm going to be doing with that trade. But the short side in metals is a hard trade, just like the short side in equities is.
Yeah. Yeah, I think so, mate.
Mm-hmm.
Okay, mate. Well, thanks so much for coming in. I think we can wrap it up there.
All right. Thank you for having me, mate.
Oh, been a really good hour. I've really enjoyed it. We will. Jeff and I will be. Actually, no, it'll be Chloe in tomorrow. Tomorrow morning it'll be Chloe, and then Jeff is back on Thursday. You'll be back next Tuesday as well, so to give us some more
next
insights.
Tuesday.
And we will be in the US show, and we'll be talking cryptos in the US show. So you feel free to wander in there if you want to as well, Orlando, and have a listen to
I will.
Very informed and knowledgeable guy, and he's going to be talking us through some bits and pieces to do with crypto. So looking forward to that. You are more than welcome, Swee. We will be back same trade time, same trade channel tomorrow. For those in the US show, we'll see you in a few hours. For those of you that are part of the UK session, we'll see you tomorrow at 5 to 8. See you soon, Orlando. Thanks, buddy.
All right. See you soon, Ash. Thank you. Bye.